Hello, I'm Drew here at LTC Tree, and I'm here with my cousin and business partner, Derek Wilkins, out in Atlanta. And hey, Derek, what are we going to talk about today?
Today, we're going to talk about the $100 trillion that's out there that the baby boomers currently have under management as far as property assets. And nobody lives forever. As that generation starts to pass away, there's a lot of money that's going to be is being inherited right now or going to be inherited in the near future. And then once that inheritance comes, what do you do with the money?
Yeah, so there are many books out there written on it, but not many people have read those books. So, what happens to so many people that we talk to in the long-term care world is, they're helping an aging parent, an elderly parent, deal with either a long-term care situation or maybe it's just something that suddenly happens. But a lot of times there's sort of a buildup with an older parent to sort of a blow off top, like kind of a lot happens at once. And so you kind of get caught flat-footed of, oh my gosh, I'm inheriting these CDs, these IRAs, this, that. Where do I go with this? And the one of the best ideas is to hire a financial advisor to get an opinion from them. But a lot of people, they don't trust their financial advisor 100%. And there's a good reason for that. So we wanted to give some sort of guidance to people that they can compare versus what their financial advisor might be telling them.
Yeah, our role here is we're not trying to be your financial advisor and replace your advisor. We love stocks. If your advisor is doing a good job, keep rolling with them. Our ask is the portion of your assets that you want with some guarantees. The portion of assets that if you have another dot-com bust, another housing crisis bust, another inflation bust of 2022, when the market's down 20, 30, 40, even 50%, we want you to have a portion of your assets with some guarantees. So when the market tanks, that portion of your assets doesn't tank. It stays flat and safe. And so our ask is to give us a shot to earn a little bit of those assets and help put them in some compelling products that give you not quite as high as a stock market, but we can get you better returns than CDs or bonds.
Exactly. And we've made numerous videos about this over the last couple of years because the reality is a lot of the things that we're using right now for financial planning didn't even exist in their current beneficial form even 5 years ago. And so a lot has changed. A lot of financial advisors have just been watching stocks go up, with a few declines here and there, but for like, nearly 15 years. But if you're inheriting some money just out of the, good stewardship to your parents, it's worth it to consider some safe alternatives for a little portion. Because like you say, we love stocks. We're not asking you to put all of your money into anything. It should be diversified first and foremost.
Yeah, exactly. And I think there's some really compelling reasons to shift a little bit of your assets towards these equity index annuities because they can be turned into what is called a lifetime income stream. And that just it means that you're going to give the insurance company a portion of your assets. It's going to grow indexed to various, indices such as the S&P, the Nasdaq, your choice. But there's also going to be a safety net in there. So in the background, it's going to be growing an income base. And believe it or not, these income bases can be 8% compounded guaranteed for 10 years. There's one that's 10% simple for 20 years. And at any point in between, you call the insurance company up and say, hey, turn on my lifetime income stream. And based on your age at the time and the value of that income base, they have to pay you X number of dollars for the rest of your life, no matter what. So if you live to be 90, 95, they have to pay you that amount of money for as long as you live. So it's almost like you're creating another pension or another stream of income like Social Security that no matter what, it's going to be there to provide you that guaranteed income stream that you can live off of, have fun with, give to the grandkids for the rest of your life.
Yeah, and what we love about that is the income is guaranteed. So you can purchase this today, and we can tell you 10 years from now, here's exactly what that guaranteed income amount will be. I'm gonna tell a short story, and I know we got to run in a second, but my Uncle Don just passed away back in November. He inherited somewhere in the range of $3 to $4 million of an orange grove sale right before the financial crisis. And he did what any good person who had inherited some money would do. He invested it in stocks. Well, what happened? The market dropped 57%, the S&P 500. So his, let's just call it $4 million, dropped to 2 million. And what did he do, Derek? He put it in CDs, which were earning less than 1% at the time. So 4 million turned into 2 million, that then started growing at 1%. My only wish is that Uncle Don had taken a little portion of that and bought himself a lifetime income annuity. Because what would
Yeah,
have happened
because
is he could have retired 10 years later, turned on a guaranteed income stream for he and his wife, my aunt, and they wouldn't have had to worry about money ever again. Instead, he kicked himself forever for losing all that money in the market.
yeah, because if you can just think back to Drew's example of Uncle Don, he has the $4 million in 2006, 2007. He's on top of the world. He puts it all in the market. What if he would have put 3 million in the market and $1 million in like an equity index annuity that gives him that lifetime income? If he had $1 million and had that guaranteed income stream coming in, Uncle Don, when the market tanked and his 3 million goes to 1.5, he might have not been as apt to panic and sell at the low, because he has that other portion of the assets to lean on. Because we love stocks, and you just got to give them time, and they'll come back like they always have. But having a portion just gives you a little bit more patience to ride the ups and downs of the market, because it was what, 2013, 2014 when the market was back up.
Yeah,
I
it
think
came right back. It's just like you say, Derek, we're just trying to protect. There's a lot of people that are very heavily invested in equities and stocks. And you should keep the vast majority of your money. Go look at some of our other videos we have on the rule of 100 and some other things about how to calculate all this. But if you've just inherited or will be inheriting some money, get multiple opinions on what you should do, because there are some new instruments out on the market that didn't exist in their current form, like I said, just 5 years ago.
Yeah, exactly. So if you want to learn more, want to talk to us, myself, Drew, other team members, call us directly. Go to our website, ltctree.com. Our phone number is 800-800-6139. We'll put it in the show notes, and we'll just have a conversation. I've been doing it for 27 years. Drew's read it about 20 years. We're happy just to give you a second opinion.
Exactly. So, all right, thanks for watching, guys. And if you like this type of content, subscribe to our channel. We're putting stuff out every couple weeks, and you can follow us along until you're ready to give us a call.
All right. Sounds good. See you guys. Bye.